morning, everyone, and welcome to Mish's Market Minute. I am your host, Mish Schneider. I'd like to thank StockCharts TV for allowing me this platform each week to bring you a look into the market. And I thought for today, we would do something a little bit different. There's a lot of talk about the IPOs that happened over the last year. And there's a particular company called Renaissance Capital. They're a huge company that have a tremendous amount of holdings in IPOs. And they actually published exactly what they were holding and how much percentage of each. This is the look here at their holdings based on all IPOs. Now, if you go scroll all the way down, there are 74, their last one being cash. But what we're going to do today is we're going to cover the top ones for the capital holdings and really to a deep dive to see if there's anything there that we need to do to in terms of next trades. As we know, the market is extremely tough right here. We're at a situation where some of the indices have broken down, yet the junk bonds, which I like to look at, still showing a risk on situation. The yields have come off a little bit. We've got a Fed meeting next week. The dollar's gotten stronger. Some of the metals have gotten killed. So it's been very, very tough to make money. And then if you have individual stocks like Palantir, which we're going to cover, going up through all of this and a few others. So this has become tougher as a stock picker and definitely more of an active type situation market. So if you're having trouble, don't feel badly. It is tough out there. Now, Renaissance is a global provider and they're an innovator in the emerging markets. They have operations in London, Moscow, New York, Cairo, Nicosia, I don't even know where that is, Lagos, Nairobi, Johannesburg, and Cape Town. So I thought the top 20 would be good for us to look at today. And here are the symbols that we're going to cover that you can take a look at later. So let's go to the charts. Okay, so here we are at the charts. And we're starting here with Snowflake. It's a technology stock. And as we know, technology has been relatively hot. Although, of course, as I always like to say, if things correct in any kind of hard way, which is definitely possible, then even technology will correct. But nonetheless, these are IPOs that have been really, really doing well. And as I'm talking to you, you can see there's sort of a sideways action. Now, remember, those of you who tuned in last week, we talked about a couple of things. We talked about changing the deviation on the real motion to 2 standard deviations that could give us a good mean reversion, whether it would be to the upside or to the downside, something overbought or oversold. And of course, we still have our leadership indicator here. So when we look at Snow, it actually here had the classic reversal pattern on that mean reversion. And that was when it went below the Bollinger Band here on the real motion indicator. And then, whoops, hold on. Let me just make sure I have that right here. Actually, the Bollinger Band didn't even exist. So when it went to the 0 line here, and then it came down below the price Bollinger Band and then ticked back up. And that was really probably the best place to be looking at buying this. But right now, what do? So you've got sideways actions and it's compressing. So there are 2 ways to look at this. Way 1 would be to say, well, we haven't quite cleared the upper Bollinger Band on the real motion indicator. So we need to see not only the compression continue, but we need to see some kind of pop in momentum. And if that's the case, then indeed we can probably make another move up, possibly closer to the topper range of this Bollinger Band here at around 338. So number 1 is you'd be looking at a move over 325 as the first aspect. Probably would risk, I would say relatively tight seems to be the way to go these days, maybe under 316. Even that seems wide, but this is over a $300 stock. But again, you'd have to say, can I think it make a move up to 338 or tougher, or excuse me, or higher? So really, essentially what I'm saying is that risk reward in a difficult market, even in hot stocks, is everything. And when you have a difficult market, doesn't mean you can't buy these hot stocks, but it does mean that you either have to look at the parameters really super wide for a longer term buy and hold, which is not the type of trading that we like to do at Market Gauge, but more a tighter trade to see if we can get a momentum pop. So that momentum pop could probably mean that you could really tighten up your risk even more, let's say to under 320. And now you're talking about a move up to 338 on risk reward makes sense. So now let's go to the next one, which is Palantir. Now, Palantir was asleep until actually this week. And you can see, again, we don't have Bollinger Bands here because this is a newer issue, but we do on the price chart. And we have not seen any kind of mean reversion trade in this. So this was really more of a situation where it was going sideways, sideways, sideways over the 200-day moving average. We finally got our close over 27, which took out all this work, and boom, here we are getting the follow through. But would I be chasing it here at this point? Well, first of all, let's take a look here at a weekly chart so we can get a little bit of back information. And you can see during this period in January, this actually traded up to 45. So the answer is yes, you have some room to the upside. But after we made these new highs and we gapped lower, you could see we have pretty good resistance here at around 30.15. So at this point in time, if I were interested in getting involved in Palantir and you didn't get in over 27 with a pretty tight risk, now you would actually almost have to wait for this to clear that 30.15 level. And then you could use, let's say, 28 as your risk point where that Bollinger Band comes in. And now you've got a $2 risk to see if you can get back up to 35 or 40 or even beyond. So to me, that's the only trade that makes sense here in Palantir. But right now it's doing well and it's outperforming the rest of the market. Now, the next one is also technology stock Cloudflare. Now, this again, in real motion, we don't even have enough information. So we're just going to have to do this on the basis of the Bollinger Bands and the moving averages here on the chart. And let's, of course, also look here at the daily chart. Go back to here's our real motion on the daily. So we've cleared the moving averages here on the real motion indicator, but we're not really killing them here in momentum. We're showing good leadership here against the benchmark. So again, if we look at this chart right now, we could say we're actually potentially having a mean reversion on the overbought condition because we've not been able to get through this overbought situation here or this move over 134.08. So in terms of buying it, this would not be the place I would buy it. I would almost prefer to see a correction or for this to decisively clear back over this Bollinger Band. And then, of course, you can use around 130, 129 to see where this thing goes. And it would be in uncharted territory, so you don't know. You also want to make sure here that when you're looking at your real motion indicators that we don't stop breaking down under that 50-day moving average, because that would mean that not only was it overbought, but we could be in for some kind of bigger correction. Now, the next one is Datadog. Now, Datadog is another really great technology software stock. And you could see what I just was telling you about net. You're actually seeing here on the Bollinger Band a move above, as I'm talking today, above 144. Momentum is good, but it hasn't gotten up here yet. So this actually, after all this price action, indicates to me that this isn't overbought and could potentially get another leg higher. But again, I would do these as more active trades at this point until we really see what's going to happen with the overall macro picture of the market. So today's low is actually 143.91. I would probably say maybe 140, 150 would be my max risk on this. But if we could get to this Bollinger Band, clear it, and then we come down to it, that would be an indication that we now are at overbought. But in the meanwhile, you might be able to get this up to 145 to 150, 150 to 155. Who knows? Like I said, when you're in uncharted territory on some of these stocks, then you have to really think differently. But like I said, think more actively. Now, I was really particularly intrigued by the next couple of stocks I'm going to show you that was part of their holdings. One is DoorDash. Now, when DoorDash first came out, it was right during the pandemic and they were doing a lot in terms of delivery and they really came out strong and then they really went down. But you can see here that there was a tremendous amount of sideways action. And this thing really took off once it cleared over all of that at 200. And in the real motion indicator, because it's so new, we don't really have anything in the real motion indicator. This issue came as of, let's see. Well, I know it was during the pandemic, so we don't have to go back there. So I'm really actually kind of interested why I'm not getting a real motion indicator, but I am getting a leadership. But nonetheless, if we look at the Bollinger Bands, Again, just like I showed you with Datadog, we're now clearing it at 221.73 is today's low, but we're inside the candle of what happened yesterday. So that means over 225.45, this has a potential also to make a good move higher. But again, I would do this as a very tight stop. In other words, if it broke down under this low and back under the Bollinger Band, I'd be gone. If it holds it, then I would see where I can get a 2-to-1 or even 3-to-1 and start taking profits and raising my stops. So some of these IPOs all of a sudden are getting very attractive. Now, this is the one that I was most interested in because, of course, it's tied to altcoins. There was some controversy about them with the SEC. This is Coinbase Global. And very different picture here in terms of the chart of what we just saw, because this is actually under the 50-day moving average. Now, remember, it broke down under the Bollinger Band, but held it. And this is really just going sideways. So 240, or let's bring it down a little bit here to 239-ish. This area from 239 to 240 has to hold. And if it does, at this point, as a phase change trader, I would say it makes the most sense for this to clear now over the 50-day moving average for a couple of days in a row, probably over 250. I would get bolder. Then you have about a $10 window here, but this is a stock that can go to 260, 270 or beyond. We've been up there. Of course, you would mind a Bollinger Band on the top to see if it can get through. So again, 240 is your support, 239, 240, and inside day today. So it would be interesting to see what happens at this 50-day moving average as we get into the following week. Now, another one that's really exciting to look at is Peloton, because this was a very big winner also during the pandemic. And now this, of course, has fallen out of favor. I mean, basically, I heard someone describe this as a bike with an iPad on it. So the technology really looked revolutionary and innovative when it first came out, but now they're trying to expand into other spaces. But again, this is a holding of Renaissance, so I thought it would be interesting to look at. We do have a real motion indicator here on this one, that we did have a mean reversion trade. That, look at that. It never got back over the Bollinger Band. So good lesson to remind you is that it's one thing to get back over the Bollinger Band and stay there. It's another thing to blip out over the Bollinger Band, and then you could see it went back down under, and then here it touched it, and that's when we started to see this pop up where we're at right now. However, we never cleared the 50, and we never cleared the 50 here for 2 days in a row, and the slope on that 50 is down. So I would keep an eye on this, maybe at around 100. This could get interesting. Otherwise, what we would really have to see now is for the momentum to start picking up, and for this to change phases to get back over that 50-day moving average, or maybe somewhere around 115. So worth watching as a company, considering it's a part of their holdings, but definitely premature to be getting involved right now. Now, Airbnb, they came out after the Afghanistan situation and said that they were working with hosts to provide housings, and that really gave this a boost as a Good Samaritan type company. Again, if we go back in time here, these mean reversion trades, this one really did not signal a buy really until about here. And so then you were so close to your 50-day moving average, you really needed to wait for 50. And when I say it's a tough market, you would have maybe made some money here, but you probably would have scratched and made no money. So it was really this day that it made its big move and then did a lot of consolidation. This stock is not easy to trade, but nonetheless, I would say that 160 is your pivotal point. And at this point, I'd say you basically may have missed the boat a little bit, because we're going to start getting into a lot of resistance here at 172, 173. I would almost say that if it gets over those levels, just like I showed you with Datadog and Cloudflare and DoorDash that have cleared this, then you have a more active momentum trade. But right here, you're sort of heading into resistance with no real clear area of support if you're interested in that particular stock. The next one is Bill.com Holdings. Notice these are all tech related. And of course, the buzz, if you talk to somebody like Kathy Wood, is that we're going into a tech future and tech is everything. And I would definitely agree with her on that. But of course, that doesn't mean that it's all going to happen right away. And of course, the macro picture of the market is always a factor as well. And the Qs have actually come down a little bit. Now, that doesn't mean that these couldn't necessarily outperform, but you really have to be careful here when you're going to get involved in these stocks that have been flying, because as you can see, they can correct very easily. Now, this one actually was also very cooperative in that it went sideways, 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 broke out of this major consolidation back here in August, and then gapped up, and has also been in a period of consolidation. You could see the mean reversion trade here where it broke down under the Bollinger Band, never quite got to the Bollinger Band here, but we didn't get much of a sell-off, and the momentum is still relatively declining. However, if this took out 300, again, it's going to be all about the active trade risk. I'd probably say I would risk tight, maybe $2.95, $5, give it no more than that, because if the momentum picks up, this could probably get up to around 333. So this is not a bad one to keep an eye on as well. Next one is U. This is Unity Software. So we're really heavy in the tech here today. Again, momentum looking good. The mean reversion trade back here was actually very pretty. So these are good things to remember next time we get any kind of massive correction. And here we are now holding up, but very close to the top here at 139.38. So I don't see a trade unless we clear the Bollinger Band on the momentum and we clear the Bollinger Band on price. And then the same thing I just said to you about the others. When you do that, you want to look at this as a momentum trade, but with a much more active mindset. In other words, tighter risk, looking to see what happens once it climbs up to new highs. So just keep 139.35 to 140 in your mind as the area that this particular stock has to clear. Okay, now we're going to get into a very interesting stock here, because this is China. And China, as you know, has done major crackdowns in all of their technology areas. They've also have done crackdowns in terms of you just had the Evergrande scandal going on. So China's been a tough play, but nonetheless, we did not have a good mean reversion trade. Even though we did in price, we didn't in momentum. We like to see them match. So at this point now, I don't know if I'd necessarily be looking at this unless A, we can get some good point of support, so that would be about 37. And B, I'd probably say at this point, I'd want to see a couple of closes over 40, and I would be hoping to see this real motion indicator at least get back over that zero line and start to try to tackle the 50-day here. So this would be one to put on the radar, especially if things work out better with China. But again, 40 is really going to be my number to be watching there. Okay, the next one there's been so much chatter about, and that's Roblox Corporation. But again, you can see here, no real motion indicator, not enough information here, I guess. But you can see right here under the 50-day moving average, and this is the leadership, so we don't have any kind of mean reversion indicator on real motion. So you just want to let this one do what it's going to do. You did have double tops here, so I'm not surprised to see this type of sell-off. And you didn't, by the way, have a new 60-day low. You had one down here was a new 60-day low, which is where you got this move from. So at this point now, I would either say this could actually go down lower than this level here under 73.90 and start to look interesting if we get another reversal play, or same kind of thing is we want to see at least a couple of closes over that 50-day moving average, maybe the slope neutralize, and then you would have about a $2-3 risk on this one to see if you can get back up to 89 and beyond. Next one here is Li Auto, another Chinese company. So again, the China companies, actually, as I'm looking at the board today, JD.com is up, Alibaba is up. So some of these Chinese companies have definitely look like they keep getting slammed with more news about China, and then they start to turn around. So that's kind of interesting here. But nonetheless, at this point, we did not get any kind of mean reversion trade on this one since back here. So we're looking just strictly now at the chart pattern. And at this point, we've got really some work to do. Again, since this is a China stock, But I would say, just stepping back here at the patterns, we do have higher lows. See, low, higher low, higher low, higher low. So if you wanted to look at this as any interesting trade, it's not an inside day because you can see so far today's high took out the high of yesterday. But if you got a close over yesterday's high, being Thursday, by the way, the 16th, 29.15, and you wanted to risk basically to the low of 28.50 and take a shot, that's, again, I'd be nimble, I'd do a small position, but really that would be to see if the leadership is starting to come up here, if these China stocks, particularly in the car industry, is starting to do a little bit better. Next one is 10x Genomics. So this is in healthcare. Now, healthcare stocks, a lot of them have gotten hammered, and you can see what's happened here. Again, no mean reversion trade to speak of. We got it here in the Bollinger Band, but we didn't even get close in the price. So this is kind of a sloppy price action. It's always interesting to see what the holdings are in these companies. Now, this one obviously is not nearly as heavily weighted as, say, Snowflake or Palantir, but it's in their portfolio. So right now, the biggest interesting thing is the new 60-plus day low, and the confirmation the next day because it closed above that high at 158.74. However, as I'm talking to you, it's trading at 157.46. So I would say if you were interested in getting involved in this, you'd have to wait for a close over 160. You would probably safely have to risk to under this low of 151.16. So you're talking about a $9 risk. So that means you'd be looking to see if this can make $20 or back up to 180. So you'd be running into some resistance here as this is having a death cross on the moving averages. So it's really going to be interesting to see, even if you don't trade it, in terms of what's going to be stronger, the new 60-plus day low confirmation that it's reversed, or all the resistance that it's going into a bearish phase now, and it really starts turning around and makes another 60-day low. This would be a good one to study just to see how those conflicting patterns might work out. At this point, I would say, given the fact that it's red today, it looks like that reversal trade may be more ominous. But again, over 160, probably not bad taking a shot. The next one is also back in technology, Dynatrace. And this is also very interesting. We got here a little bit of a mean reversion trade to the negative. You remember, see here, it cleared over the Bollinger Band, cleared over the Bollinger Band, and the price got right up to it and started coming off. Okay, so that happened. So momentum is still good, but not as good. And here we could potentially be making a new 60-plus day high and starting to sell off again. So Dynatrace would be interesting to watch either over this area of 74, or if this does turn out to be some kind of reversal, whether or not we can get back down closer to that 50-day moving average. And then that would be something that I think would be a little bit more compelling. Okay, next one, also a healthcare biotech. So, biotech is definitely part of technology, obviously. And so right now, look what's happening here. We are below the 50-day moving average. And was this a new high? Let's see, 40. No, this was a new high that didn't really confirm into a reversal pattern here, new 60-plus day high. But this was a very nasty looking bar. However, we never really got that lower here in the momentum. So this is no mean reversion trade or anything like that. This is just a failure of the 50-day moving average. So what I would do is in this one, if you were interested in keeping an eye on this one, I would first of all see if this can hold up around this 37.50 level, these bottoms right here, pretty much 37.20, 37.50. If it can, good. If it can't, well, then I'd walk away. If it does, it becomes somewhat of a risk point, not too bad, particularly if this can get back over the 50-day moving average. But even more importantly, look at where 40 is. So this is another one. If you're going to put on your radar, make a note that if this clears 40, you would have a new risk at that point. I'm guessing probably somewhere around that 50-day moving average, but it would take out all this work. And then we'd be looking at the next move up closer to the 200-day moving average. Okay, just a few more left here. I hope these are giving you good trading ideas in terms of IPO tech. This is XP and XP Inc. Financial Investment Service. This was big, look at this. This is where these mean reversions work so great on the overbought condition. It cleared the Bollinger Band on price and failed it, never could quite get through it on a closing basis. It touched it here on the momentum indicator in the real motion and started to fail it, and boom. So now we're below the 50, even though we're above the 50 here. So what we would be looking for, probably ideally in this situation, might be to break down under this August low of 43.36, maybe make a new 60+ day low, start to see the momentum come back, and then maybe you'd have a new trade in this one. But right here now, I would just let that falling knife fall. So this is Lightspeed POS, another technology company. So we're really into the tech today. We're sort of doing that Cathie Wood deep dive, not just a renaissance here. And again, we're in a situation where we haven't quite cleared the momentum in the Bollinger Band at this point. So we have some room potentially on this, but we did have a new 60+ day high that you see here with a close below the low of the day before this day. So unless it takes out 128.13, I wouldn't touch it. When you have a reversal pattern, you can either correct 5-10%, and this did indeed have a correction, but nowhere near the 10.5%. It was actually, let me see here. The high here was 128, so it would have to correct about $12 from here. So 118, 116. Well, it actually did get to around, so it did actually have a 10% correction, but it would still, in my mind, have to clear this 128.13. And then again, you'd have to have a tighter risk to see where this could go to the upside. And the last one is PPD, another healthcare stock, looking better than the other two that I showed you, going sideways. And never confirmed a breakdown on the new 60+ day high, by the way, because it didn't close below the low on this day from the day before. However, you can see here that the momentum has certainly been declining. So what we want to see happen here now is momentum to come back up. And we've got a lot of sticks. This looks like a tough one to trade overall. But with all these sticks, if I were going to get into it at all, it would probably be, because we know with these candles, these sticks are intraday price movements, but the body of the candle is the opening and the close. So the highest day of the close was this day right here. It doesn't tell you what the closing price is. It just tells you what the opening price was. But we can see that the closing price was probably somewhere around 47. So if you get a close over 47, then that would be the best closing price that this has had, period. That would be an interesting situation to take a look at based on the closing level only. So I would buy it over a close only, which means the last 5 minutes of the day, it has to be trading over 47, and maybe take a shot with a risk just about 50 cents to under 46.50 to see where this is going. Now, what's so interesting is 47 is really all the way up here. So why am I doing this wrong? There's a huge spread here in terms of the chart. Let's take a look at it like this. It might make more sense. Even though the highest close is what I'm just showed you here on this day right here, it doesn't really coincide with this. So maybe the close was more like 46.80. So let's say a close over 46.80, but I would still say a close over 47 would really seal it. Then you have about a half a buck risk to see where this can go from there. And that's it. So it's interesting to see companies like Renaissance or Cathie Wood heavily buying these tech areas here. And as a result, you can see that some of them are looking great. Healthcare needs a lot of catch up in the biotech. Some of the other ones are a little bit extended, and some for momentum players will do very well. Thank you so much for watching, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.